Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
You know, there's this one piece of mail that can cause a ton of confusion, and maybe even a little bit of panic. I'm talking about the IRS Form 1099-K. If you've ever gotten one, you know exactly what I mean. So today, we're going to tackle it. We are decoding Form 1099-K.
All right, picture this. You go to your mailbox, sorting through the usual stuff, and bam, there it is. An official-looking IRS form you were definitely not expecting. Maybe you sold a few things online, did some gig work, or hey, even just got paid back by your friends using an app. Any of those could land one of these in your hands.
But don't stress. This form is called a 1099-K. And stick with me, because over the next few minutes, we're going to break it all down. What it is, why on earth you got it, and most importantly, what you actually need to do about it.
So what is this thing really? At its heart, a 1099-K is just an information return. That's it. It's not a bill. It's not an audit notice. It's just a summary that payment companies send to you and to the IRS that shows the grand total of payments you received through their service. It's just the headline number. Okay, so why did this mysterious form land in your mailbox? The rules can feel a little tangled up, but I promise you, we are about to make them crystal clear. All right, this next part, this is where things get really confusing for a lot of people. You've probably heard different numbers being tossed around, $600, maybe $20,000. So let's just cut through the noise and set the record straight right now. There has been so much back and forth from the IRS on the reporting rules, and honestly, it's left a ton of people just scratching their heads. So let's look at the rule that was planned versus the rule that is actually in place today. Okay, let's just get straight to the point. You've almost certainly heard of this new $600 rule. Well, as you can see on the left, that rule has been put on pause. It's been delayed. But here's the deal. For right now, the current federal rule that's on the right is way different. For now, platforms only have to send you a 1099-K if you get over $20,000 and you have more than 200 transactions. You have to meet both of those requirements. Now that whole $20,000 and 200 transactions rule, that applies to what the IRS calls third-party settlement organizations, or TPSOs. Yeah, it's a clunky government term, but all it means is those payment apps, the online marketplaces, the digital go-betweens we use every day. Okay, but, and this is a big but, there's a huge exception you have to know about. If you've got a small business or even a side hustle where you accept credit or debit cards directly from customers, the rules are totally different. For those payments, there is no minimum threshold, not a single one. Even a $1 transaction is technically reportable. This is why some people get a 1099-K for what seems like a really small amount. And that leads us right to the million-dollar question, right? Just because this form showed up with a big number on it, does getting it automatically mean you owe taxes on every single penny listed?
Let's all just take a deep breath, because the IRS itself says this very, very clearly. Look, that number you see on the form, that's the gross amount. It's everything that passed through the account. It does not, and I'll say it again, it does not mean that whole amount is taxable income. This is the single most important thing to get.
Whether you owe tax or not comes down to one thing. Why did you get the money? See, the form is just a dumb calculator. It doesn't know the story behind the money. It just adds up the numbers. It's on you to figure out the context and categorize those payments. So really, you can pretty much sort every payment on that 1099-K into one of three buckets. Was it income from your business or gig work? Was it money from selling a personal item, like your old couch? Or was it a non-taxable thing, like a gift, or just a friend paying you back?
All right, enough with the theory, let's get real. We're going to walk through a few common scenarios, and these are pulled straight from IRS examples, so you can see exactly how this works in the real world.
So, here's a classic. Let's talk concert tickets. Say you bought a pair for $500. You couldn't go, so you sold them on a marketplace for $900. Your 1099-K might show that full $900 sale. But your taxable income? That's only the profit, the gain, which is $400. You only ever pay tax on the gain.
Okay, but let's be honest. What about the more likely scenario, when you sell something for less than what you paid for it? Let's say you bought a refrigerator a few years back for $1,000. Then you moved and sold it for $700. Now, this is absolutely crucial to remember. In that fridge example, you don't owe any tax, of course, because you didn't make a profit, but you also can't take that $300 loss as a deduction on your taxes. The IRS is super clear. Losses on selling personal stuff are not deductible, period.
Okay, this one is huge. Seriously, what about all those personal payments? You grab the dinner bill and all your friends send you their share, or your roommates send you their half of the rent every month. Is that income?
The short answer? Absolutely not. Reimbursements, cash gifts from your family, getting paid back for something you split, none of that counts as taxable income. Even if a payment service messes up and includes it on a 1099-K, you don't owe tax on it. The key, though, is having a record to show what it was for.
Okay, so you get the rules, you've seen the scenarios. Let's wrap this up with a super clear what to do next plan, especially if you're looking at your form and thinking something just isn't right.
So what if you're looking at this form and thinking, wait a minute, this is wrong? Maybe the total is off, or it's counting money from your roommate that it shouldn't be, because hey, it happens. What do you do? The good news is the process is pretty straightforward. First thing you do, look on the top left of that form. You're going to find the filer's info. That's the payment company. Contact them directly, explain the mistake, and ask them to send you a corrected 1099-K. And whatever you do, please keep a copy of every email or a note of every phone call.
And listen, here's a pro tip that will save you so much time and frustration. Do not call the IRS. I know it's tempting, but they can't help you here. They didn't send the form, so they can't fix it. You have to go back to the company that issued it.
So there you have it. We've decoded the form, we've straightened out the rules, and we have a game plan. The biggest lesson in all of this is that keeping good records is your absolute best friend. Knowing the why behind every payment is what gives you confidence. So the real question I have for you is this. Now that you know the game, what's your game plan for next year to make this whole process a total breeze?